Well, good morning when it's December 4th, and the theme of the day is I told you so. Trump has no deadline for a trade deal and doesn't mind waiting until after next year's presidential election to make one. Maybe he's thinking that not having a deal will help him get reelected. I don't know. I don't believe so. I don't think so at all, actually. Investors had hoped for at least enough progress to stave off a new U.S. tariffs on China goods, including smartphones, laptops, scheduled to start December 15th. That's 11 days from now. It's not happening, folks. It's not happening. We're not even remotely in that environment. And every time there's promise, people hope it's going to happen. But I'm telling you, Trump, he's got his own agenda. He doesn't want to negotiate with China for some reason. I don't know why. And it would be really good if he did, because it would be really beneficial for the economy in the long term. Now, impact on the stock market, not as bad as I thought. We saw 2 down days, including a gap down yesterday, but we had a reversal that closed to the upside. Nonetheless, I believe we are going to head down to about the 298.50, 299 level, possibly even to the 293-ish level. I don't think we're going to hit or go below the 200-day moving average, because that would put us in a bear market territory, and stocks are not bearish right now. Economy's picking up, but right now, over the next several weeks, we may be seeing a bumpy ride. Now, volatility, I hate to say I told you so. I told you guys buy options right around when VIX was 12. I said it here, I said it here, I said it here, and I've said it here. Don't believe me? Look at any of my videos last 2 weeks. I was telling you guys how volatility is at a 2-year low right here, and I said VIX is going to go to 20. As soon as the stock market starts falling, which it started, VIX will hit 20, and bonds will revert back to the 50-day moving average. Now, folks, I think we're going to see a lot of back and forth, back and forth, back and forth. That's not going to lead to a great bull market, not especially. Let me show you something eye-opening. Not with volume levels. Look at this. This was we had 2 down days yesterday, okay? Look at the volatility here, all right? And look at the volatility here and here. You got to consider the gap too. So pretty much have 2 days like this where we had a range of, say, 314.69. I'm eyeballing this to 311.18, right? That's on average about twice. On average, about twice of this. We've had that for 2 days. Now, that's selling pressure. Let's see who caused it. Let's look at volume. Volume was 72 million. 72 million, 70 million, right around 75 million. Look at volume in August on the S&P. Look at this. 175 million. 119 million. Volume needs to pick up. If you look at this downslope here, you will see that volume has been going down. Finally, we're not overbought. We're finally moving into neutral territory. This is really positive, and it'll create a stagnated situation, stagnated environment, which will cause fragmented sectors to become consolidated once again and allow the market to go higher. That's why you see ebbs and flows, up and down, up and down. It doesn't just go straight up. That rubber band just doesn't keep stretching and stretching and stretching and stretching and stretching and stretching. It has to snap. That's what you're seeing now. So, in the next few weeks, bonds, gold. Let me show you gold. You want to be in assets that have no correlation. Gold is rising. It's about to hit the 50-day line. So here's my thing. Stocks are falling. Volatility is rising. You want to increase exposure in your portfolio in assets that are not, I'm going to repeat this, not correlated to the U.S. stock market. What does non-correlated mean if you're a beginner? That means if the stock market trades up, these trade down. If the stock market trades down, they trade up. Volatility spikes when stocks go down. Bonds spike when stocks go down. Gold spikes when stocks go down. Currency spike when stocks go down. So it's a perfect time to protect your portfolio with assets that are not correlated to the stock market, like gold, like currencies. Now, I encourage you to learn about jump trade. It's a strategy. It trades currencies, it trades gold. It's not complicated. You could trade it with the same broker that you could trade. I'm just looking at the market here. I'm looking at the pre-open. You could trade the strategy with the same broker you trade stocks. So if you trade Intel, if you trade SPY, if you trade Tesla, if you trade Apple, if you trade Microsoft, you could trade currencies. Let me show you something cool. This is the euro currency. I want to show you something really, really cool. This, it's been going down. We trade the inverse. So when the currency goes down, ours goes up. So again, notice no correlation to the stock market. Look at gold. No correlation to the stock market. Bonds, same thing. No correlation to the stock market. Or better yet, inverse correlation. So you could sell your stocks, but then you got capital gains. Best way is to hedge it or increase exposure in gold, currencies. Honestly, the best thing to do right now, take a percentage of your portfolio and put it into our jump trade strategy. It has no correlation to the market. Better yet, it has negative correlation to the market. So when stocks go down, the assets in jump scream higher. And again, the best part is you don't need to know anything about commodities. You don't have to know anything about currencies. You don't have to know anything about Forex. You literally trade these assets with your stock broker. And they're completely safe. And you don't have to learn about futures, rolling over contracts, leverage, none of that stuff. We do it all for you. It's handheld, really simple. If you have a stock brokerage account, you could do this. All right, so for the S&P, I'm expecting a retracement in the near term to the 50-day line. We may see a little ebb and flow. Stocks, the bulls may still give the bears a little run for their money, but then I'm expecting a pullback right to where my associate Craig drew this line, which is right around the 302.49 level. Check out Jump Trades. Talk to you guys later. Have a great week. Stay out of trouble. Stay out of tech stocks right now. You don't want to be in tech stocks. Bye.